Today, I am taking you inside my trading account. Yes, the same one that is now up 84% since inception. To show you two new high risk trades that I just took before earnings. The S&P 500 is sitting around 6,850 points. Markets are rising, but trust me, risks are everywhere. I'm talking about my positions in Grab Holdings and Archer Aviation, why I took them despite the volatility, and what I am watching in the macro picture as we head into the year end of 2025. Before we get into it, this is not financial advice. Everything here is for educational purposes. Investing and trading come with risks, and while I share my journey transparently, you should always do your due diligence and talk to a licensed financial advisor before making decisions with your money. The S&P 500 is trading at about 6,850 when I last checked. That is roughly 0.15% up on the day. The market has been grinding higher since mid-year, but there's plenty of noise beneath the surface. We have Trump's new chip export ban targeting China, a headwind for the semiconductor names such as Nvidia, AMD. OPEC Plus just confirmed production increases of about 137,000 barrels per day, which could push oil prices up and reignite inflation worries. Meanwhile, the Federal Reserve says inflation remains uncomfortably high. That means we can't rule out another hike or at least a delay in cuts. All this sets a tone of uncertainty. Even though there's still some bullishness on paper, but the full picture, in my view, is very difficult to predict with confidence. So I am being selective in my trades that I'm taking. First of all, let me just give you an update on my account. Here is where my portfolio stands. This is the trading account that I just chose to share with you guys publicly. And my account is now at $39,537.37, slightly lower than last week, mainly because Archer pulled back after my entry. And my long-term goal remains the same, to grow this account to 100,000 Canadian dollars, one smart, disciplined trade at a time. That's my goal. I closed my SoFi cash secured puts that I had opened last week for $63 a profit, freeing up capital for new opportunities. I had chosen a strike price of $29, and today SoFi has been going up, so I wanted to free up that $2,900 per contract times 3. So that was money that was in there on that cash secured put. Let me do a quick dive into these two stocks that I took the leaps on. First up, Archer Aviation. I opened 5 leap contracts expiring January 21, 2028. Strike price 10 at $5.80 each. So these are high delta leaps. This is a high risk, high conviction play. Archer reports earnings in 3 days, which is something that I don't normally do. But I'm bullish long term on the eVTOL sector. Electric vertical takeoffs and landing aircraft, basically the future of short distance air mobility. Fundamentals first. Archer is still not profitable. They are still burning cash. It's losing about US $612 million per year. But look at the balance sheet. Over 1.7 billion in cash and equivalents as of June 2025. That's serious runway. And what I like about this, if I look at the trend, I will show it on the chart. It has been increasing, the cash and cash equivalents. Technically, on trading view, let me just show you in a second. So this is Archer Aviation, and I like to look at 1 day on my trading view chart. And one thing that I like to also do is to put the Bollinger Band, which gives me what analysts are expecting. This is what I see on the technicals. I like to take trades when the stock is particularly at this point or even at the middle point here. So right now it pulled back here, but I think what analysts are basically predicting is that probably if it drops, it might drop to $9.50, but the upside could be around this point, but you see it had retraced here. So when I look at trading, I like to look at the fundamentals first, and then I then just go on the technicals just to see potential entry points. With that, that kind of like gives you my understanding, hopefully, of what I think about this stock. The idea of me taking a long dated leaps, it means that even if it drops in the short term, I still have 2026, 2027. I can still hold on to those leaps. They are not very risky in my view, unless some things change. My plan is to hold through the earnings if the structure stays intact. If the report disappoints, I will manage the position to limit my downside. But this is a risky trade, not a long-term core holding, and I want to make that clear. The second stock that I mentioned is Grab Holdings, and this is Southeast Asia's app for ride hailing, food delivery, and fintech, kind of like the Uber of North America. I bought 4 leap contracts expiring January 21, 2028 with a strike price of $5 at around $2.45 each. Net income is around 111 million. Strong revenue growth about US 3 billion at 12 months trailing value, and they're actually reporting earnings today. Debt has dropped dramatically from over 12 billion in 2020 to just 139 million today. Free cash flows turned positive about 651 million US dollars. These are the fundamentals that I love. Improving profitability, lower debt, and positive cash flow. Technically, the stock has been trading around $6, just shy of its 52 high of $6.62. On TradingView, the momentum is consolidating into a bullish flag. Grab reports earnings today, like I mentioned, after the market. So this is another earnings risky play, but my thesis is simple. Normally, I wait for earnings, but I'm bullish on this stock. And I could be wrong. My management of risk is even if it drops on the short term, I will still hold these options and maybe get out if I see that the picture has changed or I was wrong in my technical and fundamental analysis. The 3 big lessons are that discipline over emotion is important. I only lean towards entering trades when the fundamentals and technicals line up. Risk management, I take smaller positions ahead of earnings. I'm not tying up a lot of capital. You saw that I freed up some of the money that was in cash secured puts in SoFi. Patience and adaptability. Markets change faster. Right now, the macro setup, oil, inflation, Fed tone demands flexibility, not blind optimism. That's how I've kept this portfolio growing over the past 11 or so months, even after some setbacks, by learning, adjusting, and staying humble. And if you want to go deeper, from learning how to analyze fundamentals and also manage real trading psychology, you can book a one-on-one coaching on www.streetwiseeconomics.com. That's my private community there. And if you are new here, hit the subscribe, like. I post weekly videos on trading, investing, and the real economics behind financial freedom. That's it for today. Risky trades, real lessons, and a transparent look at how I'm positioning for 2026. I'm Isaac Jonas from Streetwise Economics. Thanks for watching. Stay disciplined, and I'll see you in the markets.